The Federal Reserve is meeting again this week. You're definitely going to want to watch this one. The Federal Reserve is meeting again this week to talk about monetary policy, inflation, and ultimately if they're going to hike interest rates. And this has been a major talking point for anyone in real estate because we know that mortgage rates have increased as a result of Fed policy from prior meetings this year. So what I wanted to identify for all the consumers watching out there are the three things you want to be asking about what's going to come out of this Fed meeting and how it's going to affect the real estate market. So the first question is, how much are they going to raise rates? To me, it's a foregone conclusion rates are going to be going up. They raised rates 0.75 of a point, or 75 basis points, at their last meeting. This was the highest rate hike that we've seen in decades, and it had some real effects on the market. Before the meeting, in anticipation of a rate hike, mortgage rates spiked up north of 6%. They've since calmed down, and now there's this uncertainty about what's going to happen. So to me, the biggest question is, how much are they going to raise rates? There is talk of anywhere from 0.75 of a point to a full point, or 75 basis points to 100 basis points. What I anticipate happening is this. It could go one of two ways. They're definitely going to raise the rate because the Fed has a playbook right now they are using to tame inflation. And inflation is now at 9.1%, the highest we've seen in decades again. And they really want to get that under control. And this is their key lever to pull when trying to fight inflation. So I am clear this is something that's going to happen. And the question is, are they going to go 0.75 or are they going to go the full basis point? And then from that, question number two is, what's this going to do to mortgage rates? And what we know is after the June meeting, the Monday before the June meeting, rates spiked up. They kind of anticipated this rate hike coming from the Fed, and all of a sudden lenders raised their pricing. Mortgage rates went up. Then a couple weeks later, they dropped down a little bit. They were back in the high fives. They went from like 6.25, 6.5 down to like 5.75, 5.875 because purchase applications are down. Banks need loans and they've become very aggressive on their pricing. The refi business is gone thanks to the high 2, low 3% rates that we saw much of 2020 and 2021. So the Fed, they're going to raise rates. I don't know how much of an effect it's going to have on mortgage rates. Lawrence Yun says that the pricing might already be baked in by a lot of these lenders. I would anticipate we're going to see some reaction right out of the gate. The Fed raises rates. I would anticipate we see mortgage rates go up a little bit, maybe back into the 6 range, and then they may settle down again just like they did before because banks are getting competitive about pricing. And right now there's a window of opportunity in place, especially for buyers, to get that little bit of a lower pricing on their 30-year fixed loan rate. And again, the rates we're talking about are 30-year fixed. So the third question is, what does this have to do with the outlook for the housing market? And what I know is this. In the entire Bright MLS, and the Bright MLS includes Virginia, Maryland, Jersey, Pennsylvania, all different parts of it. You can look it up online. It's a large metro area as well as parts of DC. Just the past 7 days alone, we have seen 6,402 new homes come to the market and 5,925 homes go under contract. So we are seeing a significant, and I shouldn't say significant here, the most significant outpacing of active listings versus pending sales that we've seen since before March of 2020. And what I also know is we saw 4,708 price adjustments, price decreases that happened in that past 7-day window. And this goes from Monday to Monday of this current week to the previous week. So what that tells me is that because the Fed is pulling this button on rate hikes, buyers are going to be pleasantly surprised about the inventory options that are out there. A lot of buyers are still saying there's no inventory. We've got the data that tells you the exact opposite. Inventory is rising, and it's rising a little more steadily than it had been throughout the spring market, which is going to give buyers more opportunities. There's the ability to negotiate, get contingencies accepted. These are all things as a result of this Fed meeting because everyone is very cautious right now. When the Fed starts to raise rates, people get cautious. They want to see where pricing is going to calm down, where rates are going to come in. And as a result, we're seeing inventory rise, which has been the number one complaint from home buyers over the past 24 months. And we're seeing sellers have to make adjustments to their prices instead of just listing the home and fielding offers and waiting for people to come in. So what does this mean for the market? And for sellers, what I'm clear on is if you're thinking about selling your home, I'd be getting it on the market now and not waiting until the fall. We're seeing the cost of money is rising. We're seeing that inventory is rising. And the best thing for a seller is to have your home on the market when the neighbors don't. So I would be very, very keen on getting your home on the market a lot sooner than you might have anticipated or might have planned to in the past. That's number one. For buyers, I'd be looking at, hey, there's an opportunity to get this little bit of a lower rate in, because even if rates jump up a little bit, that affects your monthly payment dramatically. I also see opportunity in this mid-July to end of August timeframe because everyone's on vacation. There's some people that are just ignoring things and waiting until the fall to re-engage in their home search. And if you're one of those buyers out there that wrote an offer and it didn't get accepted, wrote 2 offers, wrote 3 offers, maybe wrote 10 offers and it didn't get accepted, now is your opportunity to have less competition, inventory's moving in your favor, and if a home's been on the market more than 7-10 days, I'd be writing a lower offer on that property. Don't be shy about getting aggressive as a buyer, asking for a quick time frame, doing things that would have been unheard of in 2020 or 2021. When I say quick time frame, what I mean is a quick response time frame. So go back to things you feel comfortable with as a buyer, and you may be pleasantly surprised, as long as the price is strong, the price is fair, of the terms you can get accepted. There's a lot of hesitation coming out of this Fed meeting coming up, and those who act, whether it's sellers or buyers, are going to be the ones that reap the benefits of the current shifting climate. You're definitely going to want to watch this one.